Hello, my crypto gang, Extreme Trades here, back with you again. And in this video, we will talk about Elliot wave theory. And first of all, let's say that it's a very popular theory about the professional traders, and it is widely used. The main point of this theory is that the market moves into the five waves: one, two, three, 4, 5. Then it goes into a retracement A, B, C. And then there comes another wave. For example, you can copy that one, put it here. Well, that's just the basics of the Elliott wave theory. For example, I've prepared some conditions for you here. Let's delete this one from the chart. And what I have here is the rules and guidelines. Let's copy that one. First of all, there are impulse waves 1, 3, and 5, and they can also be subdivided into 5 waves. So if you will look at the chart, here I got it for you marked 1, 2, 3, 4, 5. And the wave 1 is an impulsive wave because you can see a strong impulse going up. And there comes the wave 3 with another strong impulse. And the wave 5 is another impulse. And then you have a corrective waves A, B, C. And here's A, B, C. Let me actually mark it for you. A, B, C. Let's go ahead into the settings and I will make it smaller. Okay, and what it's saying is that every impulsive wave 1, 3, and 5 can be also divided into 5 subwaves. For example, here's 1, 2, then we had an extended wave 3, 4, and 5. Let's also mark it with a smaller degree, not the primary. Let's make it minor and have another color selected for that. And the same way you can go lower and lower. I mean, like this wave can also be divided into 5 waves, and every retracement is ABC correction. For example, here it's also ABC. And then this cycle, a complete cycle of a 5-way and ABC, is a bigger one, right? So this is a bigger 1, 2, 3, 4, 5. So this could be 3 somewhere there. And this is a bigger time frame, like the bigger scale. So let's make it this one. Why is it important? And why is it so obvious now? Look at that. That means that now I will delete this one and we will focus on this chart. You can see here that now it is going for the wave 2, and whenever the wave 2 will bottom, then there will be a wave 3 coming. And what is most important and what is cool about Elliott wave is that most of the Elliotians, they will dream and they will try to catch the wave 3, because at the most probabilities this will be the stiffest and the fastest and the most reasonable for your investment wave. And if you catch it, you're good luck. Okay, let's go ahead into the rules. So like you see here, wave 1 must be an impulse or leading diagonal. We're not going to talk about what is a leading diagonal because that's a whole different story. But here comes wave 1, a strong impulse. Then what's next? The rules. Wave 2 never trace more than the length of wave 1. So wave 2 will never retrace lower than this point. The same way here, wave 2 will never retrace lower than the length of the wave 1, so it's not going to retrace more than here. We'll also talk about the probabilities where it's most likely to land. And let's continue. Wave 3 is never the shortest, and I will continue. Wave 3 is most of the time is the longest one. So here comes the wave 3, and guess what? There will be wave 3 coming soon. Also notice that a lot of eliticians, if you'll take 2 or 3 eliticians and you'll give them this chart, they may do it differently. For example, somebody can say, well, here is, they will put like this one is wave 1 and this is ABC. Somebody will put it here. Then somebody will say, well, this was 1, 2, this is 3, 4, and then the fifth one coming. Um, so it's kind of not so obvious, but I will show you another trick which shows that this is the most likely to be the reasonable one, the reasonable count. Let's go ahead. What else is important? Wave 4 never enters the wave 1 territory, or on high leverage market, it can enter with the wick. Okay, so wave 4 never enters wave 1 territory. So this is how low it can go. Over here, the same thing, you see here's 1, here's 4, here's 4, right? So it didn't go lower and it never entered the wave 1 territory. What's the next criteria? The next criteria is wave 4 can enter the territory in high leverage market with the wick, right? We talked about that. Wave 5 must be an impulse or an ending diagonal. All the 3 motive waves can never be extended, but most of the time wave 3 or wave 5 is extended. For example, here you see there's an extended wave 3. See how big it is? And this is the cool thing about it, is the wave 3 is usually the extended ones. So it goes all the way here, and if you catch that one, you're in a good profit, right? Okay, what about the guidelines? Wave 5 can be truncated. Yes, it can. For example, over here, if you will take this one, here's 1, 2, 3, 4, and the small 5. There's a truncation of the wave 5 here. If you want, I'll mark it for you. 1, 2, 3, 4. Oh, sorry, it just disappeared. Don't know why it did that with me. 3, 4, 5. There's a truncation of wave 5. And then here's ABC. All right, let's go ahead. Usually either wave 3 or wave 5 is extended. And then use Fibonacci retracement tool to calculate retracement for wave 2 and 4, and use Fibonacci extension tool to target the wave 3 and 5. Okay, but before we're going to go into that, let me show you something else. Let me clear this chart for you. I will delete this one. And let's delete this one. How can we most likely find those most important tops like 4, 5, 3, 2, 1? To do that on a higher time frame, and right now we're on 1 week time frame. And by the way, this is the Brave new coin index. So that's the whole history of a Bitcoin. And here comes the help of such a powerful indicator like RSI. Check this out. Let me also clear this chart a little bit, have a better visual representation. For example, check out 2 and 4, right? Over here. There's 2, and then there's 4. Now check the RSI indicator. Right, here's 2, and here's 4. See over here on the lower low. Then the same goes for the 5. Since there was an extension in the wave 5, you see a lot of things here, a lot of tops, and the highest was the 5. Then it came A, B, C, and you also see it on RSI, those lower lows. Then it goes to the top of the wave 1, and now what is showing you is that this is more likely to have wave 2 land somewhere here, though it might still go a little bit lower, but most probable is that it's somewhere there where it's going to land, right? That's how you can find wave 2. Also, let's go ahead and I will show you another interesting thing, statistics and probability. Since Elliott wave is a method that is used for decades, I believe, a lot of people found some statistics and they find how you can predict the most probable zones for different wave points to land. Like for example, for the wave 2 or for the wave 3, they can use the projection. For us right now, the most important is, since we're looking for the wave 2, where it is most likely to land. Let's actually zoom in a little, make it a little bit bigger so we can look at it. I will delete something that we don't need. Okay, so where the wave 2 is most likely to land. Wave 2 retracement. Okay, there it goes. Connect point 0 and 1 with Fibonacci retracement tool. Well, this is usually how we do it. And then there is 70% chance for the wave 2 to land in the zone between 0382 and 0618 fib levels. All right, so let's do it. This is what I typically do, and if you've been a subscriber, you watched my video, you know it. From the swing low to the swing high. And there's a 70% chance that the wave 2 will land somewhere in between this area. Over there? Yes, definitely. So it can actually go a little bit lower, but you never know. So if you would dollar cost average and you will entry anywhere on this area, you are most likely to be super profitable whenever the price will go then higher into the wave 3. Okay, so how can we find out the most probable area for the wave 3 where it can go? Let's come back here. Wave 3, we will have to use Fibonacci extension tool, and the length of the wave 1 projected from the point will give us the desired result. Okay, so 45% is the probability that it will land somewhere between 1.618 and 1.75 levels. Let's measure that. How can we measure that? Go ahead, take the Fib extension tool, go from the swing low to the swing high. Let's imagine that this was the bottom for the wave 2, and guess where it is most likely to land? Somewhere here, right? Where it can go even higher. And check out that level. Wow. Many people are saying that it will go like to, I don't know, to 100,000. But check how high this will go. How big that actually is. Is that? Yeah, that's a lot. I mean, that's like $1.7 million price, right? Sounds like crazy, but it is likely to happen. So whenever you are accumulating anywhere here, do you worry if you buy it for 20,000 or you buy it for 15,000, or even if you buy it for 10,000, even if the price will go that low? Do you actually care if you have that high potential movement? Check this out. Even if it'll go like one extension, 100% extension, that's still a lot. Here's a lot, but this is the most likely area for it to land. So that sounds ridiculous, but it's actually true. That's the Elliott wave theory. And of course, that is not a guarantee. You got to take it into the consideration and consider all your risk before investing. And you know that investment is also risky, is always risky. So I hope you like that content. If you want me to go a little bit deeper into the Elliott wave theory, let me know. I had several lessons already prepared. I may do some videos to give you a little bit more extended view on that. Most important, have a safe and profitable trading. Talk to you later. Bye bye.